For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, everybody, I'm back with the Saturday Sendout podcast and newsletter from the Simple Side. We took a bit of a break, but we're back, and I cannot wait to get into what's been going on in the markets with you today. Let's talk.
Welcome to the Simple Side. Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place.
All right, everybody, like I said, welcome back to the Saturday Sendout from the Simple Side. Again, this is both a podcast and a newsletter, so if you're listening to one or the other, well, I guess you're only going to be listening to the podcast, but jump over to thesimpleside.substack.com where you can subscribe to my newsletter, and you'll get an update like this every single week. Plus, of course, the newsletter has a bunch of special things for paying subscribers. And if you want to become one of the hundreds of people that are currently a paid subscriber to the newsletter, you can go and do all of that at thesimpleside.substack.com/subscribe. All right. For the folks that are new, let me quick explain to you how this newsletter and podcast work. Every weekend on Saturday, we send out this podcast and this newsletter with market commentary, our weekly picks performance, an interesting trade idea or a few interesting trade ideas, and then we talk about our total portfolio performance. Then our paying subscribers get access to our weekly picks for next week, which include mergers and acquisition stocks, top pick stocks, and then we also give them every single week free microcap stock picks and earnings and options plays. All right, let's get into it. I had a realization this past week that the market commentary that I give you shouldn't just be things that I think are interesting and shouldn't just be things that I think are going to be valuable. What I should be trying to do is to make you the most knowledgeable person in the room when it comes to anything and everything happening in the markets. And there's two ways that I can do that. I can either go a mile deep and an inch wide, or I can go a mile wide and an inch deep. So we can either dive into one topic and talk about that, or I can cover a whole bunch of topics just real quickly, just to give you an idea of everything that's going on in the markets. And I want to do that. I like doing the mile wide and an inch deep update for you guys. So that way you can go and find what's most interesting to you and go dive into it and do all your own research that way. But I don't want to dive into one topic that you don't find interesting. I want you to be able to go and do your own research. I've added a link in the newsletter that will take you to a quick survey, so you can fill that out and tell me if you think this format is something that you want to see going forward, if it's something you want to see changed, or if you like or dislike the way that everything has been put together. So feel free to go and use that link and let me know what you think of everything. All right, without further ado, let's get into everything. Markets kind of spent the week playing hopscotch with record highs. The S&P 500 flirted with a new peak, which was buoyed by mega cap muscle. Thank you, NVIDIA and Google, for that AI-fueled rally. But profit takers kept things grounded. We saw semiconductors pop, small caps flop, and bond yields dipped as the rate cut hopes flickered. For the big picture, the S&P 500 did hit a new record high early in the week, driven by a Nike-fueled rally and U.S.-China trade optimism. But by week's end, it cooled and still just 0.09% off from its all-time high. Now, Fed Chair Powell did not rock the boat during the Senate testimony that he had. Yield slid the 2-year down to 3.72% and the 10-year at 4.25%. And durable goods surprised to the upside, and home sales, by no surprise, did not surprise. Things are definitely looking shaky in the home market. The NASDAQ 100 performed incredibly well, thanks again to that AI rally in big tech, while small caps, i.e. the Russell 2000, and mid caps lagged behind. Europe wobbled, Asia was mixed, oil was very volatile thanks to that 12-day war, as it's so been proclaimed. Gold shimmered slightly, and copper did copper things, also known as nothing. There were some sectors and stocks that did stand out. However, in the communications sector, we saw a 1.8% lift in semiconductors. Like I said, stayed quite hot. The Philly CME index is now up 28.6% for the quarter. We saw Nvidia plus 4.33%, Alphabet plus 2.24%, Apple plus 0.63%, and Microsoft plus 0.44%, which kept the indexes afloat. And a quick fun fact for you today, these four companies, Nvidia, Alphabet, also known as Google, Apple, and Microsoft, now account for more GDP than some entire continents, including Antarctica, which we all know creates a lot of value for the world economy. That's a joke, sorry. All right, we also saw Micron, ticker MU, surge after an AI-powered beat. Microsoft had a price target bump thanks to its $13 billion AI biz, and Tesla staged a robotaxi rally despite European sales sliding. Also, it might be worth noting that Tesla fired their head of sales for Europe, and I think North America as well, but I'm not 100% sure on that. But I do know that they did fire their head of European sales. On the flop side, FedEx was down 3.27% and delivered crazy amounts of disappointment. Again, Tesla sales down 40% year over year. Ooh. All right, let's talk about some earnings and headlines that we saw this week as well. Nike ran up 15% on solid earnings and a new supply chain game plan. Unilever splashed $1.5 billion on Dr. Squatch, a soap company targeted at Gen Z, and I think they just recently started selling soap infused with Sydney Sweeney's bathwater, which is just so unreasonable. Could you imagine paying $1.5 billion for a brand that does something like that? Insane to me. Unilever also owns a lot of ice cream brands, so not sure how that aligns, but do whatever you want. RTL bought Sky Dutchland from Comcast for $150 million as the streaming wars start going continental. That's going to be an interesting thing to pay attention to. Now, Concentrix doubled down on AI, beat expectations, Carnival raised yield guidance, FedEx outlined a $1 billion cost-cutting plan, and Walgreens posted a beat while navigating an acquisition. All right, let's get into some M&A mayhem from this past week. Spartan-Nash was bought for $1.77 billion by C&S Wholesale Grocers, and they paid a 52.5% premium on the stock. If you go look at Spartan-Nash's stock, and I believe the ticker on that is SPTN, they had a massive run-up in stock price. If you go look at, I think, June 20th, they jumped up from 17.62 to 26.36 US dollars. An absolutely insane tear there. Shift4 expanded down under with Smart Play, of course, investing over in Australia. Rubrik scooped up Predibase to level up its AI game. And Vision Marine acquired a Florida boat dealer, which I believe is named Nautical Ventures. Hive Digital also bought an AI data center up in Toronto, Canada. I wonder if the play there is to spend less money on the energy required to run all that just because they keep things so cool up there in Canada. Also, I apologize for all the little noise that you might be hearing in the background, all the little beeps. That is actually, believe it or not, people subscribing to my newsletter, which again, you can find at thesimpleside.substack.com. All right, we've got some odds and ends to clear up as well. Palantir, who inked a $1 million deal to help build nuclear reactors. I don't know why nuclear sounded so weird coming out of my mouth, but it did. Pfizer made hemophilia news, while Eli Lilly launched its obesity drug in India, tapping into one of the most populated countries in the entire world. General Motors had to recall 62,000 trucks for brake issues, and Xiaomi, which is the Chinese Tesla, I guess you could call it, launched a cheaper EV than Tesla's Model Y and got something like 200,000 orders within minutes. I'm pretty sure they sold out after their launch. 200,000 orders in minutes. It's going to be extremely interesting to see if a Chinese car maker will break into the US auto market. And if they do, it is going to be trouble for every car maker in the US. And also, you want to talk about quality, it is going to drop drastically. All right, that is all that I have for the week updates from this past week. Now I get to talk about how my weekly stock picks have been performing. And let me just say, I am so extremely pleased with the performance. If you've been following me for some time, you may have read an article that I sent out in the newsletter called Dumb Money Fueling the Markets Since COVID. And basically what I outlined is that we have so many retail traders in the market, and they're all trying to game the market so often that it just makes long-term investing really the best play. However, in the short term, with all the volatility, there is a lot of alpha to be captured, also known as just returns. There's a lot of returns able to be captured just because there's so many people playing around with the stock market, and the reality is they don't really know what they're doing. So if you buckle down, do some research, pay attention, you can actually beat all of these people and outperform them quite handily. And that's what I've done over the past 49 weeks. I've seen a 66.97% return over the past 49 weeks, with annualized returns predicted to be 71.07% if this run continues. Now you'll be able to also see in the newsletter, there's graphics there. Go and check that out. And it'll show you how much I beat the market by this week, how much I've beat the market for the first quarter, second quarter, and third quarter since I started sending out this newsletter, and then also the stocks that I gave to paying subscribers last week. Those stocks were ONL, NANC, NTES, GOP, SURE, again, these are tickers, INTU, QXO, PAYX, and AAPL. Of course, paying subscribers get the strategy to invest in all these stocks, and our average return that we captured over this past week was 2.68%, which, believe it or not, lagged behind the S&P 500, which captured 3.34% returns over this past week. All right, let's keep up with some of the interesting trade ideas that I've had over the past couple of weeks. Those stocks are UNH, Apple, and then I've been talking about IPO flipping, and we'll get into that a little bit here in a second. UNH, for those of you that don't know, has been experiencing heavy buying from insiders, institutional buyers, and politicians, all while the stock is down 39% year to date, and I think down 50% from its all-time high. UNH stock rose by around 2.5% last week. Now, Apple, we've been talking about because it was the recipient of personalized Trump tariff attacks and is one of the few stocks that is still down drastically from the beginning of the year, something like negative 16.37% year to date. Apple was up 2.6% last week if you include the pre-market trading action that happened. I think over the week by itself, it was only up something like 0.44% or something in that range. It wasn't even up over a percent. This week, both UNH and Apple followed the general market trend, rising with the rest of the market. UNH in particular had some great news helping it with that gain. The recent healthcare spending cuts in the big, beautiful bill haven't been popular per se with the Senate, and this has had most healthcare companies and care operators rising on the news. UNH also recently announced a new CEO within their Optimum Health system, and that is Dr. Patrick Conway. Note that Optum Health only counts for a small percentage of UNH's revenue at this point in time, but know that Dr. Conway is probably going to be a great addition to this team. He formerly led Optum RX and was the head of the North Carolina part of Blue Cross Blue Shield, and was also once the Center for Medicare and Medicaid Innovation at CMS. We likely aren't going to see any tangible results in the next earnings call with UNH from things that Dr. Conway has been able to do. However, over the next 3 to 4 quarters, we will likely see if he's going to be making a large difference at the company, which could be very valuable for shareholders. Apple, of course, saw a bump this week as well, partly from the news that broke about their potential purchase of Perplexity AI. We'll see how things pan out there, but I'm not super hopeful. Apple doesn't seem to do a lot of M&A work. The thing that kept Apple from continuing its run, well, it might have been the news that EU-mandated App Store changes are coming to Apple. Essentially, the EU is requiring Apple to provide developers with more flexibility in payment handling and app promotion. To avoid any fines from the EU, Apple announced new App Store fees, including a 5% commission on any digital purchase made outside of the App Store, which is currently based on in-store commissions that are 15 to 30%. So they're missing out on a little bit of margin there, and they refuse to let developers have their way without commissions being charged to them through anything run through the App Store. I think this could bring the stock back below 200. I think it currently sits at 201, and it could possibly dive down below 190, which I think offers an attractive investment opportunity for those looking for a future dividend cash cow and offers possible growth in the long and medium term. Now, my remarks about IPOs have been right on the money. For those of you that remember, just a little bit ago, I was talking about IPO scalping or IPO, I don't even know what you would call it, IPO flipping. Basically, what I've been saying is that there's so much dumb money in the markets that these IPOs are going to have crazy run-ups every time as soon as the stock drops. And if you want to try to capture some of that alpha, you can do so just by buying those stocks at IPO. For example, Circle was down 28% this past week, but was up over 700% from its initial IPO price. Other IPOs have performed similarly, having huge run-ups after their IPO date, but then experiencing drops, especially over this past week, or just down year-to-date in general. Some of the IPOs that are down year-to-date, Mountain, ticker MNTN, down 16.5%, Chime is down 10.91%, Bowl down 6.8%, and all of the aforementioned IPOs had massive stock pops in the first few days or weeks of trading. I'm going to continue to watch UNH, Apple, and IPOs for opportunities in that space. Now, if you're not super interested in the weekly trading, but you just like listening to our market commentary and some of the stuff that we have going on, and you want to look into longer term portfolios, longer term plays, I have great news for you. I utilize something called a dumbbell portfolio approach, with one side of the dumbbell offering a safe long-term option, which I call our flagship fund in the Simple Side 50, and the other side going for growth, contrarian trades, and weekly picks is what I call those. This balanced approach has proven effective time and time again for me, and you can see our overall average portfolio gain if you're going and looking at the newsletter. What it's showing you is that our contrarian portfolio is up 67.29% this year. Our weekly stocks are up 44.14% this year, and our safe bets portfolio is somewhat in line with the S&P 500, up around 1.5% or something like that this year. Now, if you're a paying subscriber, what you're about to read in the newsletter is all of our weekly picks for this next week. We've got, I think, something like 6 buys for you, 7 buys if you want to buy the 2 stocks that are just different sides of the same coin. But go and check all those out. Of course, we've got mergers and acquisitions news for you. We've got our top investment ideas, and we've got those microcap stock picks. Plus, we've got those implied option price movements that you can go and bet on as well. And we just have one of those for you this week, and that's going to be Constellations Brands, ticker STZ, which is reporting earnings on July 1. All right, everybody, I hope you enjoyed today's podcast and newsletter. We hope to be doing more like this in the future. Again, go and click on that link in the newsletter. It's at the very top that says, let me know your thoughts on the new format, and fill out that survey for me to let me know if I should change anything up or if I should keep going with the same format. And I will be seeing you next week.